Good morning. It is May the 6th, 2016. We come to the biggest news day of the month. The focus will be non-farm payroll numbers and unemployment. And there can be a whipsaw if one of these numbers is off the consensus and opposite the other number. If they both move parallel in the same direction, if they're off by an amount but in the same direction, the market will ignore them. The major focus is always non-farm payrolls, but it will be confirmed by the unemployment numbers. And what most people don't realize is that 90% of the gain in the unemployment number at 4.9% unemployment has come from people falling out of the labor market. We don't have a strong number. Just read this morning on some of the news summaries. Heavy truck orders are off 29% in the month of April. I believe that was the number. Every day we look at economic contraction, economic slowing around the globe and in our economy, and then the Fed comes up with these numbers. So, not the Fed, but the Bureau of Labor Statistics. So nobody really believes them. But having said that, because Treasuries have rallied into the number on the chatter, or that's being talked about right now, is this number will come in at 175 or lower. The ADP number was forecast at 195. It came in at 156. So it's influencing the feeling, and the market has rallied. So if we did not have the unemployment numbers, we'd be selling failure to basically to take out 131. So sell 1 would be 27 to 31. Sell 2 would be 3 to 7. On the buy side, the breakout came from 17 and a half. So we'd be trying to buy the 16 to 20 area, followed by a 9 to 13. To take advantage of this number, you have to position before the number actually hits the tapes, and there's a lot of uncertainty associated with that. The E-mini is usually good for scoop orders 10 points away, 16, say 20 plus or minus on the 10-year, and the bond can be as high as 1.5 points. So 10 for the E-mini, 1.5, 1 point to 1.5 on the bond, 20 give or take for the 10 years, the way to handle this. But again, the newsday trading strategy that we have developed over the years works pretty well, and it's pretty simple to trade. Let's say that the market trades up on the news, it's supportive, better than it was thought to be. On this first correction, you enter the market. In this case, you would be long. And you've got 3 entry points. You've got the mode mean, you've got the value area low, and then you've got the point where the news hit. You can almost always fill a tick inside whichever one is closer to the market's high or low, the mode or the mean. That's the most aggressive entry. Value area low, kind of in between, and then eventually what we usually find is that 2, 3, 4, 5 hours, quite often the market gets back to where the news hit the market. But on that first correction, if the market comes up and fails to take out that high, you exit the trade. The other way to trade this is, in this case, let's say it goes up, we find resistance, market then will rotate down and find support, then it'll move into development, and you play in the 10-year, you play plus or minus 230 seconds around development. So that to me is the safer way to trade this type of news, because the bottom line is that while your guesses are pretty good and quite often will be correct, you can't know this news with 100% certainty. You got on the 10-year, you've got half a point, sometimes a full point's worth of exposure or risk. And if you're taking 3, 4, 6, 30 seconds per trade on your day trading basis, that's a lot of risk for your program to absorb. Okay, looking at the 30-year, 28 to the buck will be the first area that could hold. I think if we take it out, we're probably headed higher, so 7 to 11, sell 1. Then 19 to 23, sell 2. But we've come a pretty far piece, long way. On the buy side, the first area is support. They broke it out at 22, so 16 to 20 will be 1. First buy will be 9 to 13. Because the economic news is slowing, and then 01 to 29. That was a great picture, Jeff, looking at the, was it 4.5 miles? And there are other places. That's not the only place rolling equipment, rolling stock is being stored. I mean, this farce that we've got a great economy, I mean, the news isn't going to say any different because of the wrath of the administration when you don't do what you're told to do. And face it, if your news beat is a government agency and you're out there reporting bad stuff on that agency, they're less inclined to talk with you. They won't give you the scoops that you need to maintain your competitive position with your peers. You scratch my back and I will scratch yours. It is the way that it works. Probably the way it works in your own personal life too. Okay, gold, just really kind of on hold at this number. Comes in at 175 or below. Below 200, it should rally gold. Comes in above 200, we should see selling in gold. Right now, gold is set up to sell. If you put all this together, you're dealing with trading range structure. Buyers below 78, sellers above 88, and we're at 82 right here. So not quite in the middle, but close to it. So know the news, you have the trade. And again, this market will react with a pretty big move, like 10 bucks if the numbers are well off. So if we went into this at 82, we'd be looking to sell 90, 92, then maybe 95, 97. And again, I mean, you just don't know how the market's going to react and how far it will move given the lack of liquidity on these numbers. 10 points from 82 would have us in the 70 to 72 area for buy 1. And then our 65, 67 for buy 2. And we'll adjust these numbers after the news. Looking at the euro, comes in less than 200,000. The euro should rally. Comes in more than 200,000. The euro should sell. And again, we're finding buyers in the 114 area, 114.10. And the spill was from 114.75, and we're currently at 38. So 75 would be sell 1, 115 even, sell 2. On the buy side, 114 even, then 13.75 for buy 2. And again, we'll just have to adjust these numbers after the news. This is a major piece of news. It does impact the trading in a big way initially. And to reap the profits, take advantage of that volatility, you have to position before the market is hit by that news. Okay, crude looks like it's trying to sell. The the fires north of Alberta. At Fort McMurray, G-Manise, too many names, are supposed to take 5 million barrels of production out of the current supply situation. They're also looking for North American oil storage above the ground to be 550 million barrels, which is bigger than it's been since 1929. So they continue to pump. They continue to store it over ground. Everybody's always hopeful that eventually demand will come back in balance with supply, and then they'll start working it down. You never know that for sure. So this 4250 area is pretty good support. It is a ways away. It's where the low volume number is. Well, that's $1 and a quarter away, and you can see that 4450 is pretty good resistance. So 44 and a quarter, and this number does not get hit like the other numbers do. So if you wanted to trade the regular numbers in the regular areas, crude's the place to do it. 43 even, 43 and a quarter by 1 allows them to get stops beneath that number. Then 42.50, 42 and a quarter for buy 2. As always, the fundamentals say crude oil should be pointed or trading lower. And some days crude cooperates, and some days it doesn't. And that's the beauty of crude. You just trade it technically, and you just don't worry too much about it. Okay, the E-mini has been sold into this number. The economics numbers continue to deteriorate. Problem with getting short in the E-mini is that the Fed just doesn't allow the market to sell with it any kind of momentum. They won't let the bottom fall out of the market. So we're in a downtrend. The market has come off of 2100. We're at 2040. About a 60-point correction. Corrections normally are 50 to 70 points in a bull market. So we've got pretty good support down here in the 2030 area. So 2025, 2030 is probably pretty good. Again, because the market is sold in this number, to reap the benefits of being right on the number, you have to position before the news is announced, and that does carry extra risk. Okay, the break in the market's at 2030, usually a 10-point offset to where the market's trading when the news hits works. So 28 to 30 by 1. 23.25 by 2. Pick up 15 points that way. We're at 38, so 48 to 50, sell 1. 53 to 55, sell 2. And again, unfortunately, to reap the benefit, you have to position before the news trades. Now, our Newsday trading strategy works very, very well, but it requires a nimbleness on the part of the trader. Sometimes you have to put a trade on in the first 20 or 30 seconds, certainly at the end of the first 3-minute bar. And if that's too much for you, let the dust settle, trade development. And that's not a bad way to go for the rest of the market. And that's the way a lot of the market will trade it. Okay, the news is hit. We're going to let the dust settle. We're going to go to our buy list or our sell list. Then we'll figure out how to initiate those trades. And there's wisdom in that approach to the market because you can't know the news. Okay, it's going to take a bit to be back with you. I will be back on the numbers. Everything pumped out right now. See you in a few.